Also joins us. Nischal, good morning. Thank you for joining us. So what are you advising your clients? I mean, ride the momentum or time to take some chips off the table?
Morning, Nikunj. I think at the moment we are just advising basically to ride the momentum. I think that is what at the moment we are recommending.
Why are you telling your clients to ride the momentum? Because the purist would say that there is bubble and trouble in the IPO market, promoters are selling and valuations are not stretched. So why not being contra? Why should one be with the crowd?
So I think there are two or three factors basically, and I think most of them are macros. So you are looking basically across the world that the interest rates are peaked out, and Fed has now actually given a signal that they are going to be doing at least 3 rate cuts in the next year. Oil is benign. If you look at domestically, I think most of the macros on the domestic front seems to be doing okay, and economy is doing well. So I think most of these macros are in a good position at the moment, and given that the interest rates are likely to get cut across the world next year, I think that is risk on for equities. So most asset classes. So I think equities is the best place to be in this kind of a scenario.
Nischal, hi there, morning. Let's also get in your take as to what the outlook holds in store for IT as a sector for the upcoming year. It has been slightly ahead of estimates when it comes to Accenture's numbers. Do you think that the optimism will set in?
I think so. Basically, as I told you, I think US interest rates are getting cut, and the economy is doing much better than what most people were expecting. I think everybody was expecting that there's going to be likely a recession in the US, but the last quarter US numbers have surprised everybody. So I think economy is on a good footing. Interest rates are going to get cut, and most of the IT companies, the market is the US for them. So I think they will, in the coming quarters, do much better than what the market is expecting.
Nischal, banks have underperformed IT this year. Banks is where there is visibility, there is margin of safety, there is reasonable amount of valuation comfort. Yes, it's the other way around.
So, Nikunj, your question is
No, my question is that banks, on paper, we can say that they are cheap, they are growing, no NPAs. Yet, banks, the banking index per se this year has given a return of 12% and IT is given a return of 22%. Despite a hazy visibility for IT, IT is given returns which are better than banks, which has a 6/6 visibility.
So I think that's more to do with the cash, the fund flows. So IT has been supported by the domestic because they were underweight last year and they have continued to buy. And banks were being sold by the FIs till very recently because they were very, very big overweight on the banks. And if they had to sell India, I think largely they own banks and they have been continuously selling except for the last 2 months. So that's why you see basically this kind of a dichotomy. Though banks, I think the fundamentals are looking much better, and IT is still hazy outlook, but they have given you different kind of returns.
That's the view coming in on the charts. Meantime, maybe Nischal, a bit of a quiz because that's exactly what Nikunj did to us this morning, quizzed us on this, talking about the IPO trend over the last many years. And he asked whether or not IPOs this year, 2023, have raised more than they did in the year 2021. What's your guess?
I don't think so. I think it has been only last 2 or 3 months basically, where the IPO market has been pretty hot, but I think most of the year there was hardly anything.
Right, you are, because in 2021 it was about 1.18 lakh crores, and year to date it's been about 49,000 crore rupees. So yeah, that's correct, getting that answer. But speaking of the kind of IPOs that we've seen, December alone has actually seen 11 IPOs come about. What's your assessment as to all the action that we're seeing within the primary markets? Has there been any sort of company profile or any individual company that has caught your eye this year?
So there have been several of them. I think the one outstanding or something which surprised me was Irida's IPO and the way the market lapped it up, and thereafter the performance of the stock. I think that seemed to be a bit unwarranted, according to me. But I do not have one coverage on that. Neither I'm a banker. So that's my personal view.
Anything else in the IPO market which you think is a good business? You may don't want to buy it right now, but on a 15% decline, you would like to buy it.
Nikunj, sorry, I have not studied most of them, given that I'm not a banker on most of these issues. So it's very difficult because these are all private companies and only limited amount of information comes under DRHP. So difficult for me to comment on the IPOs.
Nischal, another stock which of late has seen a lot of yes and no is actually Paytm. A year ago it cracked, global investors were selling, then it made a comeback. Then suddenly in middle of the month, Reserve Bank of India talks about increasing and checking risk weight risk weight on unsecured loan, and Paytm comes out and says the obvious that our business will suffer because of that. Is Paytm a good contra buy at 622, or you think best is behind Paytm?
So I don't know about the future, but I think basically Paytm still has a very hazy model. And I wouldn't put my money on that basically because I think the primary business still remains to be payment bank. I think now they are saying that they are making money on that. But I think this loan, the loans which they started doing, largely personal and unsecured, it was a difficult market, and somewhere RBI would have stepped in actually because the kind of money which I think fintechs were doling out, I think it was worrying. And I think RBI has rightly come in and tightened on that market. Now Paytm comes out and says that they are going to be now targeting the MSME, SME. Now, the first one I would have understood because there are a lot of people basically on the Paytm platform who would have taken direct loans. So I think retail loan was okay, but where are they going to source this MSME, SME clients from? Now they are going to be directly competing with the other MSME, SME guys because they do not have natural clients. So that's why I was saying the business model is hazy at the moment. Till we get clarity, I wouldn't buy Paytm.
Okay, fair enough. Let's move on, Nischal, and get in your take on what's going on within the entire infra basket, because news reports seem to suggest that the highway awards are only going to pick up pace next year as a lot of the key issues, they say, get resolved. With this momentum, with the election impact as well, how are you looking at the capex-related theme, in particular infrastructure, construction, real estate?
So two sectors, obviously real estate is doing very well. There is no question about it. I think the cycle has just started. If interest rate just keeps on getting cut as I expect, I think real estate for the next at least year or two will continue to do well. Infrastructure, you have to be selective. I don't see the road companies which have historically done very well. Basically, this year there has been hardly any orders. There have been companies which have got not a single order of road basically in the whole year, and that's why you should avoid all companies which are only road. So look at companies basically which are doing multiple jobs, basically whether it is buildings, metros, highways, maybe a part of it, but I'm saying diversified company, railways. I think these are sectors which are doing very well in the infra side. So there are a lot of companies out there basically which have been doing this. So you should focus on those.
So as you roll over to 2024, Nischal, what would be your large bet for 2024 in terms of an idea? Were you happy to allocate, let's say, 10-12% of your total allocation?
So, Nikunj, I would say basically the biggest theme which is going to play out next year is going to be rate sensitive because interest rates are going to get cut. And there are several of these sectors basically. I put out one is real estate is one of them basically. Banking, autos, IT. I think all of these are going to do very well basically in the next year in a rate cut scenario. Our top picks basically, if you would want me to name one, I think one of the banking stocks, large cap, and an IT name. So I think maybe a Tech Mahindra looks very interesting to me there. And on the banking side, I think though it may be the safe bet, HDFC Bank looks good to me at these prices because I think it has underperformed the whole of last year.
Do you believe that Tech Mahindra could be a turnaround candidate after change of guard, or do you think the IT sector? I mean, you think you like Tech Mahindra because you like IT, or you like Tech Mahindra because of change of guard?
Both of them basically, because one, I've been liking Tech Mahindra because of change of guard. They are at the lowest margins with this kind of a profile basically and this kind of a turnover. I think the margin is just sitting there basically to improve, and Tech Mahindra is big on telecom. The telecom is coming back again. So I think that's where I like Mahindra, and obviously, so it's a re-rating candidate as well as the IT background also. So both of them basically will help Tech Mahindra.
Okay, fair enough. Meantime, let's also get in a take then from you, Nischal, as to what the outlook is when it comes to individual counters. Varun Beverages, for instance, CLSA has upgraded the stock. There's their plans as well to expand globally like South Africa. And you've also got Manappuram Finance in their analyst day were very confident with respect to the non-gold business as well. And analysts say that this is going to be pretty positive for the company as it could help improve investor confidence. Do you track these two companies?
So both of them we do not have under coverage. Individually, I can give you my views. I think I like both of them. Both of them are good businesses. Varun has done extremely well in the domestic market. And now I think Pepsi has seen their performance and given them another market in South Africa. So I think if they are able to replicate, obviously South Africa is not going to be as large a market as in India. But if they can replicate what performance they have done here, I think this is a good acquisition for them. As far as Manappuram is concerned, I think for most of these NBFCs, banking, BFSI sector, it's a Goldilocks scenario at the moment. Most of them have raised money, good balance sheets, asset quality is benign at the moment. So I think at least for the next couple of quarters, you should be in, if you are invested, just.
Nischal, it's been a good year for hospital and hospitality. Just a coincidence, right? But hospital and hospitality stocks, they both have done well. Next year, what will be doing better? Hospital or hospitality?
So I think you have to look at it saying that one is more of a cyclical industry, which is the hotels, and hospitality is a much longer industry basically, because as you go or as your per capita income goes up, the spending on health starts going up, and what you started seeing in India. Suddenly you see a whole bunch of hospital chains basically coming up. So Indians can afford now better medical care, and that's why basically we're seeing all these hospital chains coming across. So I would say basically, if you are a long-term investor, you should be in the hospitals, because that's where the long-term continuous growth of 10-12%, I very clearly see for a whole decade in the hospital sector. Hospitality, obviously, I think this is a good year. Last year was good for them. Again, I see at least for the next 2 quarters, they do continue to do well. Beyond that, not much visibility.
Thanks very much, Nischal, for joining in and sharing with us your outlook on the markets, and wishing you a festive season and New Year's.